Ladies and gentlemen, welcome back to Data Dispatch. I hope everybody is having a great day, and we finally have the FOMC meeting behind us. It's great to finally see the actual reality of that with a 25 basis point cut. We're going to be talking about what the Fed sees for the remainder of the year and talking about even in 2026 in terms of additional rate cuts. Are they going dovish or more of a hawkish type of outlook? On top of that, you also see Palantir that secures a major deal, which could be a big catalyst that pushes Palantir up into its next trading zone. We're going to be talking about all this on top of some other stocks that are making some big moves, looking at some historical trends after we've seen a rate cut like this, and what indications that we could be looking for towards the end of the year in terms of the stock market's momentum. If you are a new or returning reviewer, hit that like button, subscribe for daily videos, and let's pop it up on the screen here. First, let's talk about Palantir, what we've been talking about every day, closing here at 168.33 and actually starting to accumulate and make a move in the overnight hours here. Palantir is trying to reclaim 170 at 169.70 right now, up about another $1.40. Now, before we get too far into the technicals here, let's talk about the news that Amit, another big content creator, I saw this first, that he shared here, that Palantir has secured a $1 billion, that's billion with the B, $1 billion contract with the United Kingdom's Ministry of Defense to supply military AI technology. And this is with Trump right now over in the UK. This deal is 10 times bigger than any previous Palantir contracts with the UK government. And he mentions how, remember, back in 2023, even when we were talking about Palantir, how they had secured the NHS deal when very few people thought that we could win it, really showcasing, actually the strength within Palantir's and basically the strength of the software that they can offer. So deepening the relationship with the UK, and also this shows you that they're deepening the relationship in terms of foreign relations with foreign countries, continuing to prove that this AI operating software of the West is working internationally. So the quality of these deals is continuing to rise. The fact that here this is worth $1 billion is huge. Their contracts are continuing to execute at a rapid pace and are growing in size. What we saw today here at Palantir, I think this was some profit taking that we saw basically right after we saw the interest rate decision in the remarks from Jerome Powell. We saw some profit taking here at 165. Palantir was able to consolidate, catch this a little bit here, and now kind of regained here from this momentum. One thing that Palantir did have, was a lot of consolidation here in the mid 150s. We've seen that with important reversals triggered there at the 150s. But now looking here with the catalyst and with the interest rate decisions behind us, talking about that and how the market could react. We'll get to that in a few moments here and how that can influence Palantir. But right back at 170, this is kind of back at this consolidation zone that's basically has been starting to form, and this is a volume shelf here. So if we see the macroeconomic environment that continues to look bullish, especially with these rate cuts here, in terms of how they're reacting to, what are the underlying weakness points of the economy, which right now it looks like the labor market compared to the consumer, that's where you could see this push possibly back in here to a breakout zone if it can give above that 170 area. That's my prediction in terms of the short term. Now, talking about the market, what happened? Where is the S&P 500 right now? We see the index that closes literally right at 6,600. This is an important resistance point that's actually been holding some support recently over the last few trading sessions, and we don't have a ton of volatility. After we did get the remarks from the Fed, we see the market only closed down here 0.1%. This is the most unvolatile move I've seen after, we're supposedly supposed to have this sell the rumor type event. Now, take that with a grain of salt because you still could have digestion of that within the next 2 days. But however, I think a lot of this move has been priced in. We see the Dow Jones that actually closes up right here. But let's talk about, CNBC here talks about even talking about taking profits on NVDA, Oracle, Palantir, which is why we could have saw, that move down a little bit to that 165. In terms of lowering the benchmark, now the range is here between 4% to 4.25% in terms of the actual federal funds rate, talking about sluggishness in the labor market. That was the major kind of indicator in its statement, saying that job gains have slowed and the unemployment rate has edged up but remains low. And the committee had noted here that, possibly possibly talking about the characterization, for the rest of the year, we're expecting another 50 basis points in terms of actual interest rate cuts. So another 2 more cuts is expected by year end. And the central bank actually turned its outlook in terms of what the market was pricing in terms of 2026. It gave a hawkish outlook for rates in 2026, where officials are predicting only 1 more rate cut in the new year. So let's talk about, this is a very interesting thread here that I found on X. Let's see what the historical data shows and what we do have in terms of some disagreement within the Feds, because there actually is a decent diversion within the Fed, which is going to get a little bit confusing. But this is for the first time ever, basically, with this interest rate cut by 25 basis points that has blamed the actual weaker labor market. And this is the first time in over 30 plus years that the Fed has actually made an interest rate cut with core PCE inflation at 2.9%. This decision is made clearly by the weakening of the labor market. And even as inflation has risen, we've seen kind of this inflation that has stayed sticky, but the Fed has been in this sticky situation because inflation is still continuing to hold. However, we're seeing the labor market unemployment rise, the job revisions numbers aren't looking that good. So the dot plot right here, though, is what starts to get interesting. You're seeing here the median projection shows an additional 50 basis point cut like we had talked about. But however, out of this dot plot right here, we see the most divided we have seen the Fed in a very long time. 9 out of the 19 Fed officials see 2 more interest rates, so that's the majority. However, 6 out of the 19 see no more interest rates, and this is a very big divergence with only 2 Fed meetings left this year, which could bring some volatility. However, in terms of the last time that we've seen a cut in a scenario like this, the last 20 times that this has happened, historically, the S&P 500 has actually rose an average of 13.9% over the next 12 months. And we kind of had talked about this in the last video, and JP Morgan had referenced something like this. And even with the S&P, but this is when the Fed is cutting rates with an S&P at a record high. So near-term volatility will persist, and within 15% of the cases has actually resulted in 1-month returns. So right now, looking at historical data, if history does repeat itself, which typically it sometimes can in the market, over the next 1 month from here, there's about a coin flip, a 50% chance that we could see a 1-month negative performance. However, over that next 12 months, an average of 13.9% to the green side. In terms of rate cuts and in terms of the actual housing market right here, homebuyer demand is hitting its second lowest level on the record, near the 2009 low. So we're at a very, very interesting point in terms of how is this market reacting? Where are we sitting at? Because the consumer is still staying pretty strong. We saw the consumer in terms of that macroeconomic data really beat out expectations. However, what we're seeing is the underlying weakness in the labor market. So with inflation staying sticky, labor market getting weak, the Fed is at a very, very indecisive point. This is where things can bring some uncertainty. However, still, what I'm personally going to be doing in terms of the long-term portfolio is this dollar cost averaging, because I want to take advantage of this historical trend of another 13.9%. And hey, I would welcome any dips that come into the market. In the short term, I'm still expecting some bullishness. However, at some point, I think the market makers are going to pull a lot of the long bulls, find them with their pants down around their knees. That's just my expectation. So not getting too over leveraged right now at this point. However, what we are seeing is a positive reaction. Like I said, we could still have digestion. The SPY is sitting right here at 662.19, up about $3. So futures are gapping up right now in the overnight hours, which is awesome. If 6,600 holds for the S&P 500 index, that's where we could get 6,700. In terms of the Mag 7, and what we're seeing is actually a lot of decent macro structure that is holding very strong in terms of the technicals. So that's why I think the market's not going to get beat down quite yet. You see Tesla right here at 432, continuing to be very, very bullish. Tesla has made an incredible run, continuing to gap up here, especially in the overnight hours at 664. Looking at some of the other stocks that we've been talking about, BMNR is continuing to make a move in the overnight hours. This stock is getting a lot of traction. I'm looking at these trendy stocks. What are people talking about? Right now, people are talking about BMNR. Why? Because with rate cuts, this is typically a bullish move for crypto. And right now, you have the Genius, the Clarity Act, and the stabilization and tokenization modernization of our financial system, Ethereum is going to be a major backbone of that type of revolution. So in terms of the financial system that is moving onto the blockchain, even if it does not happen in the capacity that a lot of people are anticipating it to, even if it happens at a much slower capacity or at a much lower percentage, BMNR could still have a lot of exposure as they are purchasing Ethereum at a rapid rate. So that's one big thing I am keeping on my radar. Other than that, looking at ASTS, kind of making a little bit of a recovery, actually holding quite strong in a very volatile market today, which means, hey, is something coming up for this? Considering that they were at $60, they've been beat down here, and at this kind of oversold RSI point, finding this bottom here at 36, I think that's the bottom that's pushed in. We'll see what happens here. Nebius getting a little bit of actually some growth right here at 94. People have been waiting for a bottom on Nebius, especially since they've had an astronomical gains. Personally, I keeping this on the watch list right now. Maybe I'll miss out on it, but you see Oklo right here, 95.29, UNH 341. Stocks are holding up quite well. We'll see how the market opens up tomorrow. Peace out, take care, and I'll catch you guys later.